Hey everyone, welcome back to Corporate Decoder, the place where we sift through the boring corporate filings so you don't have to. Today we're diving into Zone Properties' annual report, a company that's trying to build a real estate empire in the cannabis industry. Will they succeed, or will the federal laws and financial risks smoke their dreams? Let's decode. First, a quick overview. Zoned Properties is all about finding, acquiring, and leasing commercial real estate to businesses in the regulated cannabis industry. Think grow facilities and retail dispensaries. They don't touch the plants themselves, they're the landlords. They operate in two main segments, the property investment portfolio, where they manage and lease properties, and real estate services offering advisory and brokerage assistance. Their business model is based on identifying properties with zoning challenges and working to turn them into valuable cannabis-ready locations. They've strategically shifted towards direct-to-consumer real estate, leased to the best cannabis retailers. They're trying to use their proprietary property technology as a competitive edge to find investment properties. They have properties in Arizona, Illinois, and Michigan with 100% occupancy. They're also expanding real estate services across multiple states. They are looking at Arizona, Michigan, and Illinois because those states have established cannabis regulations. Let's jump into some of the property specifics. In Chino Valley, Arizona, they amended a lease which increased rent to $55,195 because of operational space. In Tempe, they also amended a lease, and VSM, the tenant, paid Zone Properties $300,000. VSM agreed to spend at least $3 million on capital improvements. In Pleasant Ridge, Michigan, an amendment to an agreement says that the tenant will spend a total of at least $850,000 toward capital improvements. Now let's look at those all-important financials. Digging into future revenue, here are a few highlights. For 2025, they anticipate a total of $2,563,226 there in future annual base rent. Looking further out, they expect about $44.9 million future lease payments. Let's dive a bit into 2024 versus 2023 performance. For the year, revenue from their property investment portfolio reached $2,080 to $4,284,222 the previous year. The revenue from real estate services also saw a sizable increase, hitting $909,003 compared to $405,099 the year before. It's important to note that this growth was primarily driven by an increase in commissions and assignment fees from real estate listings. However, a major risk for zoned properties is a potential lack of diversification. A downturn relating to the regulated cannabis industry could affect the assets. As of the end of last year, their top tenants leased over half of their total assets. Another considerable risk is that marijuana is still illegal under federal law, which could prevent zoned properties and their tenants from executing their business plans. The ever-changing laws can be a major problem and a risk. Something else to consider, preferred stockholders have a lot of control in the company. This could limit other investors' ability to influence the company. Management admits that internal control over financial reporting was not effective. They didn't have comprehensive internal controls and lacked segregation of duties. This could cause investors to lose confidence. Also, the stock is quoted on the OTCQB, which is a quotation system for equity securities. This may limit the liquidity and price of their securities. The risk management oversight falls on the executive management team with board updates as necessary. Their board considers cybersecurity risks, but they haven't identified any risks from cybersecurity threats that have materially affected the company. Okay, let's wrap it up with an opinion. So, Zone Properties is trying to make its mark as a key player in the cannabis real estate game, focusing on consumer-facing properties. They've got revenue growth, but they also face significant risks, like federal regulations, tenant stability, and asset concentration, not to mention the internal control issues that were identified. They need to sort out their internal control issues to boost investor confidence. As a smaller company, the stock has seen some volatility. It will be critical to see how they handle their liquidity going forward, as any misstep might require more funds. Finally, federal regulation is always a concern in the cannabis industry. Overall, Zoned Properties has carved out a potentially lucrative niche. However, success hinges on navigating tricky regulations and making smart financial decisions, and for them it will be anything but a chill ride. Thanks for watching. If you found this dive into Zone Properties insightful, don't forget to hit that like button, drop a comment, and subscribe for more corporate deep dives.